Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn and Associates with your metals market update, and this is for Wednesday, the 9th of January, 2019, and we're just after 2:35 p.m. Central Standard Time. Now, I think the president's message in his 9 minutes of talk time yesterday, and then the Democrats after, was a total waste of me watching my valuable TV time. I was hoping he was going to say he's invoking the national emergency. He's accomplished nothing. And politically, what did he accomplish? If you don't do something before Friday and all these people don't get their checks, all heck's going to break loose. I know you'll say, Ira, don't talk politics. I'm sorry. The markets work on a combination of the Fed, politics, the economies. I can go on and on what it does. Enough said. You're seeing today a better bounce in all the metals. We saw today the end of the Chinese-U.S. trade delegation talks. We haven't got the details yet, but after 3 days of talk, they probably got closer on certain issues, but did they do anything on intellectual rights? That is going to be the big concern. The stock market up today. I was just on Fox News and asked a question. Actually, Lauren was asking questions of other people. He said Chinese trade's behind the market, and I don't see it that way. I think it's the Fed. I think you had a watershed event where the Fed has changed its policy and they have the markets back again. When you look at gold, the one thing I like is if the Fed is pausing, and if you read the Fed notes today, they are in a pause. Well, that's bullish the what? Metal markets, because the dollar gets bearish off of that. And that's the rally that you're seeing ensue right now. You can see how it's impacting the gold right here with the sideways action. You still very much have the pattern of higher lows and higher highs. So let's assume I'm totally wrong. And that's how I approach a chart. And let's assume you get down through this 1280 level and you set up a pattern of lower highs and lower lows. Admittedly, the market has gone literally on a trajectory to the upside. It's climbed $100 an ounce. Do I think that'll change the bigger picture? Well, let's see. Where's the 18-day average of closes? What I call the line in the sand. It's under the market into the 1270s. So yes, you could temporarily pause this rally and signal that by taking it out, but I'd like to see what happens as you approach that 18-day average of closes. In terms of running the Bollinger Band, you've ended that. This is now distribution of the price gain. It's almost a consolidation. We have to see what that does. And in terms of momentum, well, here's what I'm watching. We have an embedded reading. Now, let me just show this to you. You'll see today both numbers are over 80. Yesterday, one was not. The day before, it was. Day before, both numbers over 80, and the day before, I can go on and on. So what we did is we created a bit of a trap today. We had set yesterday by losing that reading, and you'll hear me often say, the only time you can regain an embedded reading is what? The very next day, and you need something powerful to get it going. So yesterday, gold is down $4. As I'm talking, it's up $8.30. It's made up the loss plus $4, and it regained it. There's a warning sign. You don't want to see that number taken out again. 2 times in a row, it's rare that you re-embed. It can happen. I have seen it, but it's rare. So you can't afford that as a chart. That's all I'm saying. When I come over and look at the very next chart, which will probably be one of the stock ones, yep, it's GLD. You've still got the embedded reading. This is leading the futures. It hasn't lost that embedded reading. It has the pattern of higher lows, and with today's high of 122.28, you're keeping the pattern of higher highs. So I don't want to see 121.06 taken out, but more important, don't lose the embedded reading. If you don't, an upside target is still possibly the upper Bollinger Band. Take this 121.06 out, and at the same time, and I don't know if that would happen, lose the embedded reading, then I'm looking for the 18-day average of closes. In GDX, you know that when we got up to this number, I said I'm not liking this chart like I am the others, because you never did embed, you're just overbought, never had both numbers closing consecutively several days in a row over the 80 level. You're in a resistance zone up here and in a support zone back at the 18-day average of closes. And I think you can see how that's worked all the way through. So not in the bull camp on this one, not bearish either. Gold-silver ratio, silver's losing a little bit to gold, and as you can see today, even with silver up now to the 1579 level, and it's got the pattern of higher lows, higher highs, it's not as strong as the gold. It doesn't have to be. It's just not falling with it. And one of the things to keep gold very bullish is not let these other metals fall apart on it, and copper came to life. Copper's back to what number? You know, if you're down all the way here, one of the things I teach is if you lose the embedded reading, where might the market go? 18-day average of closes. Obviously, the numbers change each day, but the concept doesn't change. And you tell me where you went today and where the market stalled out. So now I call this like in a cash register. I ring it up and go, neutral, neutral. I've got a market that's hit an upside target, didn't close over it, so the swing line's up. You still have downside bias, and momentum has come back from being at an extreme, let's call it, trying to figure out what to do. In the platinum market, one of the things you learn on a chart is you look to see where resistance points might be. Like here's the upper Bollinger Band. If that doesn't work, and if, not always this way, a 100-day average, say, is up there, I look to see, is that a potential resistance? What's resistance can become support. Goes through it, comes back, tests it, and today doing the same type of thing. If this area gives ground, where do you think the market might head next? Why not back to the 18-day average to recoup itself? That could be what it does. Palladium market, I know I'm a broken record. I've been telling you, be careful of shortages out of Russia and South America. These are all-time highs, embedded reading, still a very bullish condition. But here is what I said on Fox and why. Does this look to you like anything but a breakout of a market to the downside? To me, that looks like a classic breakout. A top is formed in the dollar. That's not to say Ira's right. That's just to say, till you get back over these highs. So many markets that are priced in dollars look to see what that dollar is doing, and they take a clue from it. Right now, I have no reason to think that the dollar hasn't put in a very significant top, while it's looking more and more like the euro wants to catch the other way and get a bid even with Germany not showing good news. Remember, I've got the live webinar tomorrow. If you didn't get your invite, and it was sent again this morning, then you're not on my list. It's either in your junk, your clutter, or you didn't get on my list. Call my staff, they'll take care of that for you. If you want the silver report, I think you'll find that what I'm going to do this year is not write as much. I'm going to give you more pictures. You're going to be able to go through these reports 1, 2, 3, understand my concept, less writing, a lot more reasons why I'm taking the stance I am, and you take it from there. Want to know my stance? Look at the report. If you don't have it, go to www.iraepstein.com, click on Silver Report. We'll be sure you get it. You have a good day. I'm Ira Epstein.